Today, the SEC hits consensus with a lawsuit as the regulator continues its crypto crackdown. The U.S. Treasury finalizes new digital asset reporting rules. And Kraken's Tomas Perfumo weighs in on what's driving the crypto market as we head into the second half of 2024. Welcome to CNBC's Crypto World. I'm Tanea McKeel. We are kicking off the month of July and the second half of the year with a strong start for crypto. By noon Eastern, Bitcoin jumped above $63,000 after posting an 8% decline for June. Ether rose back above $3,400, and Solana's also on the rise. We're expecting movement on spot Ether ETFs, which the SEC carved a path for back in May. Those could get approved as soon as tomorrow. At the same time, the market is bracing for the now-defunct Tokyo-based exchange Mt. Gox to start distributing as many as 950,000 Bitcoin to customers as part of its bankruptcy process. While that's good news for creditors and customers who have been waiting for years, it could have a negative effect on price in the short term. That said, Fundstrat's Tom Lee said on Squawk Box this morning that while the Mt. Gox bankruptcy is hanging over the crypto market, he expects a sharp rebound for the cryptocurrency in the second half of the year. Okay, let's talk about the top stories. The SEC is suing Consensus in the agency's latest move to crack down on the crypto industry. The SEC alleges in its lawsuit filed Friday that the blockchain software company, quote, engaged in the offer and sale of securities and acted as an unregistered broker through its digital asset wallet called MetaMask. In April, Consensus tried to preempt the SEC's action with its own lawsuit in Texas, alleging overreach on the part of the regulator. The company said its suit followed 3 subpoenas issued last year, plus a Wells notice from the SEC that claimed Consensus was violating federal securities laws. This lawsuit is a major shift from just 2 weeks ago when Consensus declared victory in its fight with the SEC. Consensus said at the time that it received a letter from the agency saying it would be closing its investigation into Ethereum 2.0 and not pursue an enforcement action against Consensus. When we spoke with the head of litigation and investigations at Consensus late last month, she told us the company was planning to continue on with its lawsuit against the agency despite that letter. A Consensus spokesperson told CNBC on Friday that the SEC action is part of a, quote, anti-crypto agenda at the agency, adding that this is just the latest example of its regulatory overreach and a transparent attempt to redefine well-established legal standards. Next, the U.S. Treasury Department has finalized rules to help it track down crypto tax evasion. In a statement posted on Friday, the Treasury and IRS released final regulations for crypto brokers, which the Treasury says match reporting requirements for traditional financial institutions. Among other rules, brokers will now provide clients with a 1099 form specific to digital assets, which also gives the IRS insight into just how much in taxes a crypto holder owes. The Treasury's Assistant Secretary for Tax Policy said in Friday's statement that these new rules will help taxpayers more easily pay taxes owed under current law while reducing evasion by wealthy investors. These new guidelines will roll out in phases starting in 2026 for the 2025 tax season. Finally, a federal judge says the SEC's lawsuit against Binance can move forward, at least to a certain extent. In an order on Friday, Judge Amy Berman Jackson denied most of BAM Trading's motion to dismiss the regulator's case, BAM Trading being Binance's parent company. Now, Judge Jackson did dismiss part of the SEC's case, namely charges against Binance's initial coin offering and ongoing sales of the BNB token, claims around lending service BNB Vault, and charges around the sale of the stablecoin BUSD. As a refresher, the SEC sued Binance and its founder, Changpeng Zhao, in June of last year for operating as an unregistered exchange. That's, of course, before the massive $4.3 billion settlement between the exchange and the US at the end of last year. All right, let's turn our attention back to markets. I spoke with Kraken's Tomas Perfumo, head of strategy for the digital asset exchange, to find out what he expects to be the biggest driving factors for crypto in the second half of this year. What is your short-term outlook for Bitcoin, and how is this level today different from this level last month versus this level in March?
Sure. So I would say that we've had moments like this in the past in terms of consolidation, and so obviously going from the new all-time high back in March down to this level is not abnormal for Bitcoin in particular. What's interesting about where we are in this level now is that it really corresponds with a decline in volatility. And so I think that speaks to the level of consolidation. So right now, Bitcoin volatility is actually in the 20s in terms of annualized percentage. And it's getting to the point where it's almost where it was in August of last year, which was a 5-year low. So I think that speaks to the maturation of the asset, but also, again, the level of consolidation. In the short run, looking forward, call it the next 6 months, I think the biggest catalyst for Bitcoin are going to be a fewfold. You have the ongoing expansion of ETF products globally, so Hong Kong, UK, for example. You also have the ongoing expansion of access to ETF products here in the US. So, for example, a lot of registered investment advisors still have not made it available to their end clients and wealth management customers, for example. And then I would say the Ethereum ETF is a big deal. There's a very high correlation between Bitcoin and Ethereum, of course. And so that's an event we expect to play out in the next couple months. And then the US election is also big news. So that's something that's going to come in the next 5-6 months. And a lot of the rhetoric there, I think, is going to be impactful to Bitcoin.
Where does the macro fall into all of that? We're all thinking about and talking about potential rate cuts in September.
The macro, I think, is broadly very supportive. And so on a few fronts, I think what you describe here with rates is going to be, of course, impactful to everything from equities and to Bitcoin. We've seen historically a level of correlation between the two. So even now, getting past a lot of the idiosyncratic events like the Bitcoin ETF launch and like the halving, where the correlation between U.S. equity indices like the S&P 500 and the NASDAQ and Bitcoin was actually negative. And now we've turned positive roughly 0.4 nowadays. And so I think that is a reflection of us returning to that kind of macro-driven trading around Bitcoin as well. And so the rate cuts, I personally think, is going to be broadly supportive of Bitcoin, whether the rate cuts happen in September or even early next year. And I don't have a strong view either way. That's going to be, in my opinion, a tailwind. And you're seeing that as well in the equity markets, where volatility for these indices are actually dropping down to around 10% annualized on a realized basis. And so super low when you think about it in general for risk assets. But again, I think rate cuts are probably going to be the main driver of this. And then, of course, the U.S. election. So what happens there, what that bodes for the economy longer term, I think that's going to be a big driver as well.
Bitcoin has been trading in tandem with the NASDAQ 100 since about 2020, albeit not perfectly. And we're seeing kind of a divergence there right now. Do you see any signal in how those two have been trading relative to each other recently?
I think it really has to do with those idiosyncratic events. So again, like the Bitcoin halving, that's completely unrelated to the NASDAQ, for example. I think the NASDAQ in particular responds strongly to the rate environment because a lot of the tech industry being built on negative or low cash flows or earnings tends to be very hit pretty hard when you talk about rising rate environment. And so I think that also corresponds with Bitcoin, the idea that you have more liquidity in the economy, more liquidity in the financial markets. Obviously, with Bitcoin being a relatively small asset, we're talking about $1 trillion, whereas equities are in the $100 trillion plus range, globally speaking. And so that, of course, has a big impact. But I think the biggest idiosyncratic events for crypto are going to be the Ethereum ETF and then in part the election, because in the US anyway, there isn't enough clarity when it comes to regulatory posture in the country. And so that's something that, of course, already exists for NASDAQ and most of the constituents, not for crypto.
Back to Bitcoin to cap this off. What do you see between now and the end of the year? Certainly, we are in kind of the summer doldrums. You had rattled off a lot of key catalysts. We, at this very moment, we're seeing kind of slowing demand for the ETFs and some minor selling. But how far down do you see Bitcoin going again before it reverses higher, probably to hit another record this year?
Sure. So I'll break it down in a short-term, long-term. On the short-term side, I think a lot of people still live off of the narrative of the Bitcoin halving and the cycles around it. So my kind of rules of thumb, if you are someone who follows the historical patterns, you tend to have market peaks 12 to 18 months after a halving date. You tend to have volatility pick up nearly triple digits in the past, and we've only seen it as high as 80% very briefly back in March. And so again, back down to around 30%, or maybe 25-30%, so very low by historical standards. You also have the low within 30 days of the halving usually being a support for the entirety of the halving periods between halvings. And so these are things that I personally look towards to understand, are we breaking trend from historical patterns, are we not? 15% moves is not unknown to us in the crypto industry, of course. And so I think it really depends on how these catalysts play out. There's already a lot of positive expectations built into it, not a lot of downside. So the downside shocks are, I think, what hits you, what surprises you. Now, longer term, it's really the story of adoption. Crypto adoption in general globally is a little less than 10%. And so if you believe this is a technology that's going to pick up and get to much higher levels, I mean, you think about internet penetration, it's 60+% of the global population. If you got anywhere near that when it comes to crypto, I mean, you're talking about a huge amount of people and net capital flows into an asset whose supply just doesn't change. You can't mint more of it. You can't mine or create out of it thin air. And so that story leads to an environment where, frankly, you have squeezes higher. And so I personally see a lot of potential longer term for Bitcoin, Ethereum, any kind of viable crypto asset that serves a purpose for people in the world globally. And so that's how I break it down.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.